I had a client that fabricated some tax returns and claimed hundreds of millions of dollars of refunds. Several of these tax returns unfortunately paid. The client received $12, $13 million. And normally when clients walk into my office, I can comfort them a little bit. This particular situation, I couldn't say that. I'm like, wow, I've never seen something this bad.
Welcome to the John and Marc podcast. We are live at Mass Torts, Puerto Rico, or as I like to call it, Puerto Rico. We have a very interesting guest here, Glen Frost. You are a CPA and a tax accountant. Very different from the personal injury audience we usually have. But your clients that you work with all pay their taxes and need CPAs. I can't wait to talk about many of the things we're about to discuss here. Welcome to the podcast. I'm very excited to get into things today.
Thank you for having me.
Yeah. For those of you that don't know, Marc loves taxes. That is his favorite topic of discussion. He loves paying taxes.
I always pay my taxes. I pay the least amount possible at all times is what I try to do.
That is not true. Marc pays all of his taxes all the time.
Exactly per the IRS code.
Yes. Thank you, Glen, for joining us. We're here at a conference that is chock full of mass tort attorneys who are here to learn about their practices, bettering their practices, what cases should they be in, what cases should they not be in. And you are here to talk about what? What is your goal at this conference?
Sure. My goal is to meet as many, PI and mass torts lawyers as possible and talk about relevant issues, whether it's tax issues that they're facing, or we're doing a lot of work both in the employee retention credit as well as the AIPA tariff refund space. And so we're doing co-counsel arrangements with many attorneys on those issues.
So talk more about the tariff stuff. That just came down recently. How does that affect, the lawyers here or the other businesses that you've been working with?
The Trump emergency tariffs have been overturned by the Supreme Court, and approximately $170 billion is going back to importers of record. So we're representing those importers of record in claiming their AIPA tariff refunds. But we're also assisting downstream businesses in claiming those tariff refunds. And a great example is I represent a national restaurant chain and, their top suppliers, one of which is Dole Corporation. They purchase tens of millions of dollars of pineapple from Dole Corporation.
Oh, yep.
So pursuing, as an example, Dole Corporation for the proportionate share of AIPA tariffs that were passed down to the restaurant chain.
So law firms are going out and finding businesses that had to pay these tariffs for goods that were imported from their suppliers.
Yes.
Right? And then you are helping them through a co-counsel agreement recover the tariffs for their clients.
Correct. So we're doing forensic analysis of all the invoices, computing what we feel that the tariff costs were passed on to them, and then leveraging that business supplier relationship to get reimbursement of the proportionate share.
So how does that analysis work? Are you looking like what they were paying before the tariffs went in place and then what they were paying after and trying to figure out what that increase was that they had to pay pretty much?
So sometimes the tariff charges are specifically stated on invoices.
I have seen that even on small, like on electronics, they'd be like tariff surcharge where they changed the price and they added like additional price on that.
Yeah. Oftentimes they're not, but there's frequently email communications and other communications that show, hey, we have to increase your prices because of these tariffs. And then it's just really, doing a forensic analysis of the invoicing and like the overlay of the AIPA tariff regime on the back end. And we're able to kind of provide a report that shows what we believe was passed on to that.
I know it just came down, is there official process for handling those or those individual cases you're filing? Like how does that process work?
Yeah, so the importer of record was the one that paid the tariffs directly to customs. That's who's getting the money back. And there is a process to claim that money. There's an electronic portal that importers can utilize to claim it. But in the background, there's a statute of limitations that they may have to file in the Court of International Trade or file administrative protests before customs in order to protect those statutes. And then the government will be doling out that money to those importers of record.
What a complete clusterfuck.
Yeah.
Like, what was the timeline of what happened here? When did it get passed?
So,
when did it get revealed?
It had to. It's like Trump's only been president for less than 2 years.
Yeah.
So
Exactly. Yeah. So February of 2025 through February of 2026 is the relevant period. And if you recall, Trump was changing his mind overnight as a form of negotiation. So with China, it's 25%, then it's 50%, then it's 135%. And these goods were already on the boat on the way over.
yeah, those boats
when
don't
these
move
tariffs
fast.
were happening. So it is a mess.
They had to implement some sort of process to actually identify how much they need to charge each of these like in transit shipments,
Yes.
bill them, collect it, and
Yeah,
and
even
now
from the
they just got to get it back.
or from the forensic perspective, it's like if anything was coming from China, like if you're analyzing, it's like what day was it on the rate for it could be huge millions of dollars swings
Yeah.
between the weeks of the negotiation.
Yeah. So we have, CPAs, customs brokers, trade attorneys all on staff that are doing this analysis and, obviously leveraging technology to help a lot with that analysis.
So you also do ERC. How many are your tariff clients also ERC clients and like the crossover there?
Yeah, there's certainly a good number of our former ERC clients that were charged these AIPA tariffs. So I'd say it's a good percentage, 15, 20% of those clients have overlap that we've assisted in both.
You know what's like, the whole system is broken, but it trickles down, right? Like the whole economy at a macro level gets affected by the words of the president saying 50% here, 100% here. We're not repealing it unless you do this. And like the end consumer at the end of the day who's buying the Dole pineapple is now paying an extra 50%, right? We're the ones who pay.
Yeah.
And we're not going to get refunded.
Yeah, if you are, it's going to be a long, long time. We're seeing a few class action lawsuits being filed on the consumer level. So one against Costco, there's one against FedEx. But as you know, it's going to take many, many years for any of those class actions.
So,
to
okay.
Oh, you're energized now. Who needs coffee? Let's talk about.
Let's talk tariffs.
It's the most jazzed up I've seen you all day.
No, I've been trying to understand this.
Yeah.
You're saying it ended in February, and maybe my situation is separate from these specific tariffs, but I bought a patio table. I moved a couple months ago. I bought an outdoor patio table from Wayfair. They deliver the patio table. There's like a little broken clip on the bottom of the table. And Wayfair says, reach out to the manufacturer. They'll send you a new piece, right? The only thing we can do is replace the whole thing. Like it's a little piece. So literally the thing is this big, right? Size of a quarter. So I contact them and someone in broken English and email me back, gets my address, says, okay, don't worry, we'll send it to you. 2 weeks later, I get a package in the mail and the package is this big and it comes from UPS, right? And they drop off the package. I'm like, great, thanks. The little piece is in there. That week, I get a letter from UPS with a bill. I had to pay $14 in tariffs. And I don't understand how I am being charged for something that I didn't even know they were going to charge me for it, right? That the shipper paid for the shipment. Why does the individual get passed down the tariff like that? And what would have happened if I didn't pay it?
Yeah, I mean, this is a lot of this is uncharted territories, right? So a lot of this is, I think just organizations doing the best they can to comply with the, government orders that are coming out quickly. There's a lot of class groups that are developing and we'll see if there's reimbursement down the road.
Are those class lawsuits being run by like a tax attorneys like you or by like class action firms?
More
like
class
a Milberg, for example.
Correct.
That's like,
More class action firms for sure.
Interesting. What are the sectors that you're seeing be affected by those types of lawsuits? You already said Costco and FedEx. What else?
Yeah, Costco, FedEx, different. I mean, it's UPS, there's a few others that are brewing that haven't started yet, but I think you're going to see them across, many of the larger businesses, Walmart, Target. I think you'll start seeing
any of the big box retailers that import a ton of stuff all
wherever the large dollars are. I think you'll start seeing these class actions get filed.
Yeah, because imagine like the Walmarts of the world, who are the largest retailer in the nation, besides Amazon, but they're buying all their own stuff. They have such strict contracts with all their vendors to have the smallest margin. So like the influx with the tariff and how they pass that along,
It must be super.
I've heard nothing but horror stories of dealing with them. It's like a blessing and a curse. Like if you get a Walmart shelves, you're there forever, but like they beat you down on price till you're not making anything.
Yeah. So you're saying they might be upside down.
It might be. I don't know. They're not moving prices very often, or the vendors might be. I don't think Walmart are even super enthused to change their contracted unit prices just because the tariffs happened. I'm making some assumptions here.
Yeah. Well, I still think it's the end consumer that winds up getting
correct.
screwed.
And then you see some companies like Apple announce, I don't believe that they're going to even claim the tariff refunds. And, Trump made it clear that we'll remember you if you don't claim them, that we'll reward you in the future if you don't claim these refunds. So we think that there's going to be some companies that just forego that, don't have to deal with all these downstream issues. And it seems like Trump is really pushing that.
Not everyone has like Apple bankroll to be able to just say, I'm going to write that off as a line item.
For sure.
So what are some advice for anyone listening you have to be like, look into if you might be affected as a business owner or downstream from this to contact you, what they should be looking for?
Sure.
They're owed any compensation from this.
Yeah. What we're looking for are significant businesses that would have imported a significant amount from abroad of goods. We're seeing in the restaurant industry, seafood, for instance, has been wildly impacted. A lot of that comes from Asia, and the tariffs from Asia were very substantial. Furniture, electronics, casinos.
Did you say casinos?
Say casinos?
Yeah, casinos.
Double click on that one for me, please.
For sure. So slot machines or any type of
I thought they were made in the U.S.
electronics that they brought in.
Idiot. What was I thinking?
So, we're looking typically for businesses that purchased, tens of millions of dollars from abroad, and that's kind of our focus.
I actually am like, I thought we were going to be talking about tax law and like traditionally not the most entertaining topics, but if the law firms who are watching this are looking at this as an opportunity to expand their practice into areas that are not fraught with competition of all the other mass tort attorneys or all the PI firms that are in their market, this is actually like potentially like limited engagement niche case type that they can leverage their relationship with businesses that they have, figure out who may be affected, and then they can just work with you and co-counsel, and you guys will handle
Absolutely
the back end work.
What's the timeline for these from a compensation reimbursement perspective?
Yeah, so
I know it just came out, so I'm not.
Yeah, I think the sooner the better. I don't think there's any hard deadline, at least for these downstream issues. But what I'll say is it's a lot easier of a conversation prior to the importer of record getting the funds. It's a much easier conversation to say, hey, we expect that you're applying for this. When you get your money, please pass on the proportionate share, versus coming at them a year after they've received the money. It's going to be much more adversarial. It's going to be, oh, remember that refund you got? Here's a demand letter. I'm demanding that you provide this, these funds, or I'm going to sue you. So
you're going after the suppliers are the ones who should be getting the refunds, and then you are representing, or the firms you're partnering with are representing the businesses that are effectively suing the suppliers for not refunding their pro rata share of the tariff.
And we're also
I missed that piece too. You're also probably representing some of the suppliers.
We're representing some of the suppliers, and then we're representing the downstream.
I did think about a supplier could literally just get the refund and then just not mention it to anyone else downstream who's their biggest customer and keep all that extra money.
But I'd say that's probably the most common scenario. They're not giving it out if people aren't asking for it. So, but I think it's a lot easier of a conversation if you ask in advance and say, hey, I expect this. I think there's such a strong relationship between that supplier and the business that you can leverage that relationship. And the fair thing to do in business is do the right thing. And kind of what's happening.
Should they have counsel retained before they send that email and notification first? Or
I think absolutely. And I think just being able to compute the number, the amount that's owed is complex. So, having counsel figure out exactly what that amount is, I think is very important in advance.
Is there any information available through like the Freedom of Information Act where you can pull like, these are the suppliers who have paid tariffs or receiving refunds on tariffs?
There's a lot of data online. There's nearly 3,000 importers as well that have filed in the Court of International Trade. But there's just a lot of data online that you can find and develop to figure out who the right, affected business is.
Super interesting. How did you come up with this concept? Because I'm sure there are other things that are going to evolve as people watch this, like months down the line or years down the line. How did you determine this is an area of opportunity for firms?
Sure. I'd say 75 to 80% of my practice has always been business to business. And what I like to do throughout all of my firms is really look for how can I provide the most value to my client as possible. And, whether it was ERC, whether it's, high-end tax planning, whether it's tariffs, when you can deliver, potential hundreds of thousands or, multiple seven figures in refunds to these businesses, it's very hard to argue that you're not providing value. So we have a value first approach, and everything else we do, the accounting, the tax law, the, tax return preparation, that's routine, but we're always looking for providing as much value as possible to our clients.
That very much resonates with us. I mean, that's why we're doing this right now, right? Like, we love just giving people as much information as possible, as much value as possible. And that is probably the best way to grow a business, right? Whether it's yours or ours or the law firms who are listening, like, what's your best source of clients? It's referrals, right? How do you get a referral? You treat someone really well, you go above and beyond for them, you surpass their
If you
expectations.
save someone a whole lot of money on their taxes, they're going to love you.
Yeah.
Well,
Yes, you have that advantage.
probably get a lot of happy Christmas cards.
Yeah, for sure.
I have a question for you. We're in Puerto Rico right now. There's a lot of lawyers that have moved down here recently. I've heard there's some incentives. What's the deal with moving to Puerto Rico and the tax incentives for moving down here?
Yeah, I'd say there's two main incentives to talk about. One is relating to investments and short-term and long-term capital gains. If you move here, you apply under Act 60, you are then exempt from short-term and long-term capital gains, so you can grow those investments tax-free. That's one of the big opportunities here. The other,
So you can invest in money like the stock market.
correct.
As long as you're an actual resident.
And what can you define what moving here means?
So moving here, there's really two separate tests. You have to show that, one, your day count is sufficient, and it needs to be over 183 days.
6 months in a day.
Yes. And then the other thing that the IRS looks at is, where is your closer connection? Is your closer connection in the mainland United States, or is your closer connection here in Puerto Rico? So that's a facts and circumstances analysis, and it really requires you to relinquish a lot of your connections back in the United States and really establish those connections here.
Can you go into more detail what that actually means?
Yeah.
So I can't just say, hey, I'm buying a vacation house and then come here for 6 months in one day.
Yeah, that's right. I think you look at, where children are located. I think you look at where you go to the doctor. I think you look at, your relative size of your properties. What are they in the United States compared to what you have here in Puerto Rico? Your voting, your driver's license.
So if you're a law firm, you cannot have your law firm be operating in the States and you be here.
So what people do, generally, the lawyers that come here, some of them open up actual law firms and branches of the law firm here in Puerto Rico. Many of them create an export services company, and their export services company is then providing consulting services to their mainland-based law firm. So that's the other second benefit, is any effectively business income that you derive on the islands servicing mainland-based businesses, subject to a maximum all-in tax rate of 4%. That's state and federal, maximum 4%. So they established this export services company, which is effectively a consulting firm. And within their consulting firm, they're providing services to their law firm back in the mainland. And that's how any income allocable to that entity is subject to that maximum all-in 4%.
4% tax and then no capital gains.
And all the sun you could ever ask for. I've heard that there's also like a separate from the federal R&D credit, that there's a separate like Puerto Rico R&D credit. Can you explain how that works and how that like either stacks or doesn't with the federal credit?
Yeah, and I'm not with the PR stuff, because I'm not admitted in PR. I'm not a PR specialist by any means, but
Consult your own CPA.
But yeah, there's definitely a lucrative R&D regime here in Puerto Rico. You actually have seen a lot of the medical companies move here that Eli Lilly and things have operations here to take advantage of some of these Puerto Rico tax incentives.
When I thought of Puerto Rico before we came here for this and just for business, I think of it as a vacation spot. I think of it as somewhere that has like great music, good culture, good food. that came here on a cruise ship, maybe, I don't know, 5 or 6 years ago, stopped here for a day, visited Old San Juan. Those things still exist, but it is a very different growing economy here.
It is. Yeah. And there's approximately 3,000 Act 60 individuals here in Puerto Rico. And I'll say it's a very like close group. It's a very accepting group and, very impressive people from, mass torts lawyers, PI lawyers, hedge fund managers, crypto folks, just entrepreneurs in general. So it's very interesting people here.
3,000 is still a pretty small number. You think it'd be a huge influx. Yeah, 3,000. How long has Act 60 been around?
Yeah, so Act 60 has been around. Well, prior to Act 60 was Act 20 and Act 22, but yeah, for more than a decade it's been around. And what I'll say is, I think in the history of the programs, somewhere around 6,000 or 7,000 people have taken advantage of it. Some have come and gone, some have passed away. So there's, I think, approximately 3,000, 3,500 here now.
Next question I have for you. Outside of moving to Puerto Rico, which is, and pretty much severing all your ties to, continental United States to move here, what are some other things you talk to, especially with lawyers from a tax and accounting perspective, that you recommend from general advice or tips and tricks?
Sure. Yeah, and I think the main thing with trial lawyers or any contingent fee lawyer is the variability of their income, right? They have boom and bust periods. If they don't have contemporaneous financial statements to determine where their income level is falling, it's very difficult to make business decisions or tax planning decisions. So I think the first step is always, okay, you need to have very good contemporaneous financial statements on a monthly basis so that we can help you make these decisions. Once there's, you're in a situation where you have excess income, there's certainly, several things you can do. One is figure out, okay, how do I efficiently have marketing spend? How do I spend money in either my core practice area, PI, or maybe in a mass tort that we think is a good investment? How do I spend those marketing dollars to reduce my current year income? That's one, strategy available to lawyers. Another strategy is like structured settlements. So you can structure your legal fee and you can then defer that income to future periods. So many of our clients decide that they want to structure those fees, push them out in the future, get the tax deferral, have those funds invested in a tax deferred instrument that they'll recognize that income.
And those vehicles are available through third parties that offer that.
Yeah, and we work with a bunch of those third parties, and we regularly set these structures up for them.
Out of your client base, how many of them that you work with on Dave are like regular businesses, and how many of them are law firms today?
I have both law firms and accounting firms. And I think in the accounting firm arena, my CPA firm, we disproportionately represent a large number of law firms and lawyers. I'd say 20, 25% of our client base is lawyers and law firms, which is rather significant. So
what's the craziest thing you've seen someone try to do with their taxes? Make this as anonymous as possible, but I want to hear like like sometimes I think like, oh, like we got to make like very clear decisions on how we're doing this. We meet with our accountant regularly, or like I know that there are some people who are just cowboys.
Yeah, I mean, I think that's an unfair question to me because I'm a tax controversy lawyer, so I'm a civil and criminal tax lawyer. So,
oh, interesting.
As a criminal tax lawyer, I've seen the absolute worst scenarios. I had a scenario, and normally when clients walk into my office, I can comfort them a little bit, and I can say, oh, I think we'll be okay. I've seen worse. This particular situation, I couldn't say that. I'm like, wow, I've never seen something this bad. I had a client that fabricated some tax returns and claimed hundreds of millions of dollars of refunds. And several of these tax returns unfortunately paid, and the client receives $12, $13 million and proceeded to spend that money on various things. And it was not a good situation.
Whew, wasn't expecting that one.
No, that's like straight up like
defrauding the government.
Yeah. So we see those situations, unfortunately. We see.
So you deal with people where they say, that like IRS is coming after them, that you're going to represent them now to help
keep them out of jail.
Yeah, we do a lot of the tax controversy type work, or even you would be surprised how many lawyers aren't planning. and for whatever reason, they have large tax liabilities. They don't have the cash flow to pay. They might owe multiple hundreds of thousands or millions of dollars, and will negotiate with the IRS. Will create payment plans and those
I
types.
used to see that stuff advertised on TV and or B2C for consumers all the time, like tax settlement services.
Yeah.
Is that still a thing?
Yeah, it's a thing. One other thing that's super helpful, because and for trial lawyers as well, there's this case. It's called the Kwong case, Kwong. It came out of the Court of Federal Claims, and there's a limited time frame here, July 10th of this year. But what the Kwong case said is that there was a FEMA emergency order in effect, and because of this FEMA emergency order, the tax return deadline for 2019, 2020, 2021, and 2022 was extended until July 10th, 2023. So anybody who has charged any penalties or interest on those tax years can apply to get refunds of those penalties or interest.
Oh, wow. I didn't know that.
So we've got clients. I've got a client that's a hedge fund guy. He's going to get $9 million back. I've got several that are multi seven-figure, many six-figure clients. But there's a substantial amount of money that is there as well.
Didn't know that.
Yeah. A lot of things I didn't know I'm learning today.
What I could pepper you with questions all day. So Glenn, you're doing a great job. Thank you. What are some of the number one things you see that flag people getting audited by the IRS, whether they're law firm owners or business owners?
Yeah, so the IRS, they use something called the DIP score. So they do random audits that are statistical audits, and they input all of this business data into a software program of theirs. And they use this DIF scoring system. And what they're looking at is, okay, what are your expenses in comparison to your revenue level? And, their software algorithms, their AI now grabs the tax returns that are high DIF score returns where they say, hey, something's just not right. This person's, spending X amount of dollars on entertainment expenses, or, they're spending too much in the area of marketing compared to their revenue. And it flags those returns, and then the government selects those returns for exam.
Interesting. Are there known benchmarks that people should try and stay under for certain categories? Is this published data?
It's not published. They keep the DIF score very, very close. But yeah, I think categories of expenses like other expense items, entertainment expense items, those are certainly flagged often from a business standpoint. Mm-hmm.
I want to pivot to a topic that is very much part of the conversation here at this event, which is mergers and acquisitions and private equity. What has your involvement been with a lot of the firms that are, whether they're getting included as part of a roll-up or, just selling to a bigger firm?
Sure. Yeah, no, I've been involved certainly as tax counsel on these transactions. I'm also admitted in Arizona, where obviously the fee sharing provisions are in Arizona, and a lot of this activity is happening in Arizona. So we've been involved in that capacity, as well as many of the private equity vehicles are doing it through an MSO structure. So helping them come up with structuring and tax implications of selling their law firm.
What are at a high level, the implications for the firms that are selling, right? Are there capital gains on the sale of?
Sure. Yeah. So you can likely structure it in a way where you recognize some capital gains compared to ordinary income treatment. And that's typically the goal, certainly, of the seller. Sometimes private equity has another goal, and it's just being able to come and meet minds in those arenas.
Do you usually represent one side over the other in these transactions, or do you find yourself as sort of like an impartial mediator?
Yeah, I'd say although I'm very involved in private equity, I'm more often, because I know a lot of lawyers, I'm more often involved on the law firm side of the transaction.
What's the one thing that you would like to give them as advice if they were to rewind to the beginning of these negotiations, that you would say you should have done X or asked X or something early on to make this transaction either more in your favor or maybe happen at all because the deal fell apart as they're walking into the beginning of these negotiations?
Yeah, I think it's I think it's really having good contemporaneous business records. We see a lot of law firms that don't have proper accounting, proper accounting, and therefore their financials aren't adequate. They're not able to properly communicate profitability level, EBITDA level. Typically, these are EBITDA multiples that these PE firms are paying. So there's different add backs and adjustments in that, and being able to adequately communicate that no, my EBITDA is higher and here's why. And a lot of it's like, hey, these things should be considered more of these marketing costs should be more of a capital investment versus an actual current year expense. And that's, I think, something where the negotiation that could mean millions of dollars for.
So if a firm is considering selling themselves in the near future, it's probably good exercise to get, a better CFO or an outside service to
Get your house in order.
I mean, to fix your books, to have them all
Not
cleaned
fix
up.
your books.
Not fix, but get your financials cleaned up and in order before starting the process.
Correct.
So everything is correct before starting because you're trying to unwind it while negotiating, and you're not going to be in a good situation.
And then trimming some unnecessary expenses
Before going into it.
before going into the negotiations, so that those unnecessary expenses aren't decreasing your multiple.
How far out do they have to start? Do they?
Yeah,
and now-
3 years. I'd say at least 3 years of financials is kind of what most firms are looking at.
What percentage of firms would you say have their shit together when they walk into these discussions versus don't?
Yeah, I'd say less than half have their stuff together for sure. So,
Of the half that do,
Is it because they don't have Glen Frost accounting and CPA firm on staff?
that's part of it. They may have multiple advisors, but they're not syncing together to all come to the table to fulfill whatever the goal is. So I think that's a lot of times you get accountants that are just too busy. They're just barely keeping up with the tax compliance aspect, and they're not digging in to provide the real consulting services.
So if the John and Marc law firm, we want to sell in a year, what is the team that we need to put in place to make sure we are set up?
our hypothetical law firm that
Yeah.
does not exist.
Yes.
Sure. Yeah, no, I think you definitely need someone leading the transaction. So M&A counsel that's leading the business documents. You need tax counsel. You need a competent CPA. You likely need ethics counsel to, properly document everything. I think that's primarily the team. You have to make sure that your CPA is adequately strategizing on the tax planning side as well. So there might be someone who comes in from a just pure tax strategy standpoint as well.
That's a big team.
Well, it's a big deal, right?
Yeah.
You're talking about a law firm is a complex business
Yeah.
that does traditionally, unless you're enterprise level, right? Traditionally doesn't have a CFO, traditionally doesn't have integrated accounting into their case management system at the level that you would want or need. There's many, many reasons why that you need so many different pieces in order, because you're effectively selling your firm off to another entity that has to have some continuity. They have to understand this is the marketing that's working. Here's how much it costs. Here's how effective it is. This is our technology. These are our contracts. These are our people. This is what they do. And when you say 50% have their house in order, do you start going through that and then identify clear I don't want to say misrepresentations, but misunderstandings of the information that they have, where they think everything is the way that they think it is, but then when you start peeling back the layers, what are the common things that you see? What are the trends?
Yeah, I mean, there's common things that come up in diligence. I mean, frequently there's state tax issues, which state are you properly recognizing income in proper states? I think private equity tries to do certain asset purchases to protect themselves and not potentially stock purchases, so that they don't assume some of that liability and risk. But there's definitely items that come up in diligence.
I was talking to a broker, middleman between law firms and whether it's private equity or hedge funds, whatever. And we got into a deep conversation about marketing attribution and understanding where the cases are actually coming from and which of the marketing sources can you actually pull a lever and expand versus the ones that are fully capped out. And that is not a conversation that you can just have at like a dollars and cents level. It rolls up to a dollars and cents conversation, but this is like, you need, in addition to the team that you spoke about, you need subject matter experts in your firm who can have a conversation with the acquiring party and say, this is how we do X, right? In marketing, this is our brand investment. This is what we attribute the yield to for that brand investment. This is what we spend on each digital channel. This is the technology that we use to make these attribution assumptions and decisions. And like, if you're walking into these conversations and you're just looking at it from a financial perspective, the story could potentially be undervaluing the firm, or you may walk in thinking that you've got something bigger than what you actually do, and then that misalignment leads to either the deal falling apart or, you know, one party being unhappy with the end result. I think we're going to be talking to the private equity panel. I think we're going to dig into some of those questions because I want to hear, like, how are they actually evaluating these deals? They're happening all the time. Rioux got acquired by Fortress yesterday. That was a huge deal, right? 9-figure deal.
I'll say, there's not many industries that operate as profitably as the legal industry, contingent fee lawyers. You know, there's maybe the software industry, et cetera, but we see a lot of different industry tax returns. And if you're a PI firm or mass torts firm that really has things dialed in and zeroed in, you could be operating at a 50, 60, we've seen 70% profit margin, which is unheard of in many industries.
Well, what are the multiples looking like on these transactions right now? I come from like the tech space, so like the tech, like SaaS multiples are insane. No make any sense to me, but like I'm curious what they're looking like on this side.
And I don't have visibility on all of them. One thing I'll say is I started to acquire CPA firms over a decade ago, and I watched private equity come in, and I saw valuations just increase. A decade ago, we were able to buy CPA firms for, 3 to 4 times EBITDA, typically on a revenue multiple, not so much EBITDA, but we were able to buy, it worked out to 3 to 4 times. We're hearing some firms 3 to 4 times is where it's at. We're hearing others it's much higher. So what we can expect is that these valuations are just going to increase as private equity penetrates the legal industry even more. A lot of money moving around there.
I think it's a great way to end it. Glenn, I think our audience is going to want to reach out to you and ask you more questions. If they want to get in touch with you, how do they get in touch with you?
Absolutely. Yeah. So feel free to give me a call, 410-497-5947, Frost Law, or shoot me an email, Glen, Glen, .Frost, F-R-O-S-T, at askfrost.com, askfrost.com.
Glenn, this is a fantastic conversation. I appreciate the time. I could have kept asking you questions further. I might be one of those people calling or emailing you because we have some tax questions we might need to discuss with you off camera here. But thank you so much for joining us. This was an absolute pleasure.
Yeah, thanks, man.
Thanks for having us.
Yeah,
appreciate it. Hi, I'm Glen Frost. I'm on the John and Marc podcast. Please subscribe.